Now let's finish out our income. We sum them all up, and we get taxable income of 480. Calculate the tax on that times 30%, and that gives us 144. So we can come over here and put current amount of 144. And what was our deferred amount? Let's take a look. We know that it's 3. And how do we know that it's 3? Well, remember how I said we were going to come to the DTA? Our bad debt expense did not exist before, so there's no DTA for bad debt, but we expensed $10 worth that we were not allowed to expense for tax. We expensed 15, wrote off 5, so that $10 we were never allowed to expense for tax, and therefore $10 times 0.3 gives us our $3 deferred tax asset. Because we expensed it for for book, we're not allowed to for tax. So we record it as an asset because we are taxed on that $10. We're not allowed to deduct it. But in the future, when it does get written off, because we expect it to be written off, that's why we recorded the bad debt expense, then we'll be able to take it. So it's a deferred tax asset because we will be able to reduce our amount that we paid in the future, because that's how deferred tax assets work. So this $3 increases it and has a balance of 3. And we look at this $6 right over here, the deferred amount, boom, this 6. And right over here, this 3. 6 and 3 net together to be 3. And that would be, I guess I should make this one negative. Negative 3, because our deferred tax expense goes up. Remember, if we have a net DTL going up, then that's crediting the DTL and therefore debiting the deferred tax expense. Expense and negative because it's a debit. So now we can figure out our net income. And I think I'm going to have to pause this video for just a sec. All right, so let's jump back in. Sorry, I had to make sure that I wasn't going to go over time. I have to break this video up to be able to post it on YouTube. So we did questions 1 and 2, the tax provision for pepper and for salt. Now question 3 is asking for us to complete the balance sheet and income statement amounts. We already did the income statement amounts up here. Now let's go down to the balance sheet amounts. Actually, let's start right here and do the beginning retained earnings. We know that that's 412 from before. If you don't believe me, just look right there. 412 and 154. So we can put 154. What was net income? It's above. What was net income? It's above. And what was dividends? Does it tell us? It does tell us. We had dividends of negative 20, and salt paid out dividends of 15. And then we can figure out our our ending retained earnings amount. It's 699, and this part is 167. So these amounts were given to us. DTA. What is the DTA balance? Well, you would want to put 3 and the deferred tax amount, the deferred tax liability of 18, because you have a DTL right here for parent of 18, and you had that DTA of 3. Remember though that you net those on the balance sheet. So this 18 will become 15 and this 3 will become 0. There is no DTA for the sub, but there is a DTL of, how much was it? Let's look. It was 9. So we come over here and put 9. If you didn't see where I got that from, it was this part right here, the ending balance, 9. So those are the amounts that we put. And then investment in S, what happened to it? Well, it was 426. And what did we do to change it? We increased it by 28, and we decreased it by 15, and we decreased it by 14. So we increased 28 and decreased 29. So it's going to go to 425. Started at 426, remember, right over here, 426. And then we're going to jump over here and make it 425. Investment in S, 0 for the sub. Oops, sorry. And goodwill, remember we always start those at 0. And total assets, let's add them all up. And just drag this over here. And then I'm going to just go ahead and put this sum in right here so that it works while I do it. And drag it over. What is our common stock? Well, you might say, Oh, it's just 110 because that's what it was last time. Well, yeah, it was 110, but remember that it says we bought $250 worth of equipment by issuing 5 stocks or 5 shares of stock. So our 110 becomes 115, and APIC, how much goes in there? Well, before our balance was 695, so let's start with 695 equals 695 plus what amount do we need to consider? If we bought $250 worth of equipment for 5 shares, the common stock is only going to get 5 because that's its par value, $1 each. And so the $245 difference is going to be added to it to give us 940. Let me make sure that's right. That is right. So does that make sense? Hopefully. Retained earnings, let's grab it from above, our ending balance. And then this part should be pretty easy. Our common stock stays at 50, and their APIC stays at 100, and their ending retained earnings is right there. So we've now finished our balance sheet, and let's do the journal entries because these kind of get pretty complicated. And then I'm not going to have you watch me type in all of the consolidated amounts again. I'm just going to cut that out. So what do we do first? Basic entry. What is the basic entry? Let's get rid of their equity. 50 and 100 and 167. Nope, oh, that's wrong. Remember, don't ever touch this row. You just do their stock, and then you come up here and touch their beginning retained earnings. So 154, and we want to get rid of their dividends, 15, and we want to get rid of the income that we got from them, which was 28. So we debit it. Why? Because that's like an expense. We're getting rid of income. And later we'll deal with a different amount for the amortization to zero that out. But those amounts are all there. So our investment in S should be a sum of this and this and this, oops, and this, and we should subtract off the 15. There we go. So 317 is our basic amount. We're then going to add the differential in just a minute. First, let's do the amortization. What do? 14 again. We can subtract off 20 for operating expense, and our deferred tax liability went down by 6. This is all the same as before. 14, oops, that was wrong. 14, that's our amortization entry, and it's the same as it was over here. So if you were confused about what happened, go ahead and look at that video. I don't want this to drag on forever, even though it feels like it already is. And then our differential amount. We now need to add in to the equipment only 60. Why? Because it started at 100, and last year we used 20. This year we used 20, so now the remainder is 60. And goodwill, again, still 66. And then the DTL only goes up 18 because it started at 30, and then we lowered it 6 last year and lowered it 6 this year. So the net remainder is 18 for the same reason that this amount is 60. So let's now touch the differential amount here. We want to add the sum of this, and we want to subtract the 18 here, and that gives us 425, which zeroes it out completely. And now I'm going to go in and type in all the consolidated stuff. All right, I just did the consolidated stuff. So we have all of these amounts we just summed across. Remember, this one is a sum of what's above it. This one is, you can sum across. This one, you just grab the net income from above. This one, you can sum across again. And this one, you don't sum across, you just sum down. Now, the reason that this is a little bit odd is because your journal entry to get rid of the income comes up here. You have net income listed twice. So technically, you could do 28 and 28 and it would all work out. You'd have to put them on both lines because it's the same line item. Likewise, when you get down to retained earnings down here, the ending balance, you can't add across because you don't have an adjustment here because you already added the adjustments up here. And so if you added the 28 right here and sum down and then sum across, that same amount would have to happen down here. I guess what I'm trying to explain is the reason that we can't sum across for some of these is because you have to deal with them as their own thing. So net income would be the sum of all the income statement amounts, or you could just add all of the adjustments down here and have 48 and 20 and sum across. And then for net income here, you already have net income up here. And so this line and this line need to be the exact same. The reason we don't put an entry here is because it will not balance in our worksheet because we've duplicated these lines. Likewise, ending retained earnings and retained earnings are a duplication. So that's why we can't sum across, because they're duplicated. You'd have to mirror all of those things. And if you mirror them, these debits and credit columns will not line up. So that's why it's just confusing. We just have to deal with it. That's the way they gave it to us. So questions 1 and 2 were about the provision. Question 3 was about filling in the balance sheet and income statement. We did that. Question 4 was about the journal entries, and we did those. Question 5 was about the consolidated stuff, and we just did that. Now let's jump over to the cash flows. And this one's not actually that hard because we've already done it. Net income, 307, that comes right from there. Depreciation, 135. That's our $40 and our $75 that we got from our book amounts. 75, 40, boom, boom. And the $20 difference, and I'm trying to remember right now where that came from. Oh yeah, it's the differential. Remember we added in this $20 for depreciation expense. So we have to consider that here too. So 40 plus 75 plus 20 gives us our depreciation. The loss on the sale, the financial accounting, the book, had a loss on the sale of the $35. Remember over here, tax book, we had the book of 35, sold it for 30, we had a loss. We have to add that back because that wasn't a cash event. Or actually, sorry, it wasn't an operating event. It happened down here in the investing. Increase in AR, all of these things are just from the balance sheet, increases and decreases in assets and liabilities. The adjustments here, and then you add the operating cash flow. Investing, we have purchase of equipment, $70, and sale of equipment, $30. And then financing, we have dividends paid of 20. You add all of those back together, and you get 264. Beginning balance of 405, ending balance of 141. And let's jump over here to our consolidated cash, 141. It checks out, we're good to go. Don't forget that you have two things that you have to include: cash paid for taxes and the significant non-cash events. Purchase of $250 worth of equipment for stock. And on this last one, statement of cash flows, we had cash paid for taxes. You'd also have cash paid for interest, but we didn't have that in this case, so we didn't include it. All right, I think that's everything for this amount, or sorry, not this amount. That's everything for this question, this homework problem. Hopefully it makes sense, and best of luck on the final.